So let's work down into the 15-minute. So right away, we want to get that midnight opening price on here. And we want to go ahead and extend that through. So far, London's created a range that we're trading inside of right now. We have a imbalance here on the 15-minute. And again, the reason I'm using the volume imbalance is because that's part of the fair value gap, right? So you wouldn't just label it like this. You want the entire range of the inefficiency. So I'm going to be using this 15-minute fair value gap, also using this one here, the one we're trading in right now. We'll make this one, let me move this. We'll make this one gray here. And these are the two key levels I'll be working with today to read institutional order flow. Getting things organized on my trading layout. So looking at the first fair value gap here, that'll be this turquoise line here. Let's make that first FG. All right, so zooming out, now that we've taken out the London highs here, I have to zoom out to the left. So let's go up to an hourly time frame and see what other liquidity we're working with here. All right, so we've taken out the buy stops here. The next liquidity pool is going to be back here at the 21,968 level. So if we start to accelerate through these London highs here, then we have the buy side back here. So now what I'm measuring is, do we get above that first fair value gap, close above it, and start to show strength, and that would bring the buy side back in play here. All right, so a nice closure above the first fair value gap. Now I want to see, do we drop down, use it as support, and rally? Let me put a limit order inside this volume imbalance here. All right, that tags me in there.
Order filled.
Stop loss just going to go below this low here. Then take profit. We'll see if I can get it to trade up into the 968 level. And then because of the day, two are just going to come off at this high here. We're in the 10 o'clock hour. I want to see speed to the upside now. New 5-minute candle opening. So it's okay for it to open, create a wick, but we don't want to see it overlap this entire candle here, which is why the stop is down here.
Order filled.
Yeah, we want to see speed, something like that. Going risk-free here. That stops me out.
Stop filled.
So let's go ahead and just do a short review here of this price run, right? What allowed me to look for higher prices? Well, they sunk it into the sell stops here. And then we used this first fair value gap for feedback. Was it bearish? Did we sink away from it? It did, but then this fair value gap, we did what? We closed above. We closed above this gap here. So that told me this is not a short. And then I said, okay, I'm still waiting. I'm still reading. And then the market did what? It closed above, decisively above that first fair value gap here. As soon as we closed above it, I immediately went down into the lower time frame because now I could see an easy price run into these equal highs here. And then ended up having to use that volume imbalance here, which is not a volume imbalance on the mini contract. But if you look on the micro contract, you will see a little volume imbalance in there. And as we were tagging down into that, that's what I was going long in there. Right. So once order flows confirm bullish, then you just buy a discount. Rips. So that here they've blown out these buy stops here. So if you guys recall on the 15-minute time frame, right, we're watching this gap here. I told you guys this would be my key level here for the session, right? So when you're back testing at the end of the day and you're reviewing and you're doing your exercises to get good at reading price action, this is what you're doing, right? The levels I'm giving you guys pre-market, maybe the levels you're watching pre-market, right? We trade down into it and then it does what? It finds support here on the 15-minute chart. So what's that telling me about order flows? Is it bullish or bearish? Obviously bullish if we're finding support inside the fair value gap, right? And then you can study these price runs and then reverse engineer them, right? Then go to the 5-minute, go to the 1-minute, study your model, right? Observe, where did it form? Where would you enter? Where would you manage risk, right? Where would you take profits on the way? And over time of doing that every single day for 45 minutes to an hour, you're going to acquire the skill set of being able to anticipate these price runs before they happen.